All right, traders, good afternoon. Today is December 17th, and we're going to come at you live and direct with another market review for December 17th through the end of the week. Hopefully this helps everybody out as far as profiting this week, and we do have some awesome setups in the market. So let's get started. So as requested, the top three pairs requested was Euro USD, dollar versus the yen, as well as gold. So let's start off the week with gold, guys. So looking at the daily chart, we have some activity here. So we've been in an uptrend for quite some time, guys. Mark your daily levels. So you have your low of this formation down at the 11.50 an ounce range, 11.60 an ounce range, and you have your first higher low in this region here. We shot through which was once resistance, which is now support, our 1200 an ounce level, and once again formed another higher low. So let's go on ahead and highlight that region just so your trend is clear, guys. The hardest part about trading is finding trend. So you have another higher low there. And on one of my daily levels around 12.14 an ounce, we have yet another higher low. So it's a clear uptrend, guys. Clear uptrend. Now, open in the week or ending last week, 1, 2, 3, 4, 5, slight bearish action on the daily time frame. What was once resistance at 12.34 an ounce, we shot through. And as you guys see, guys, the daily levels will make your trading so much better. Monitoring the daily candlesticks. And you have to be a bit patient to be able to trade off the daily candlesticks. So as you guys see here, we tested support, shot up to resistance, but we did not break, and it's been testing this zone since December 7th, a good 10 days now. So we consolidated and we pulled back here. As you guys see, a lot of wicks towards this support zone, trading in between the moving averages, and we have a bullish candlestick here, which engulfed our previous day's candle, which gave a clear buy signal on lower time frames, not yet off the daily. Now, 12.50 has been an extreme solid level in the past. If we go left, look here. We broke, popped above, broke, stayed under this level for a while. Going left, once again, broke below, reversed off this level. So it's very, this uptrend here. You had a nice pullback, wick below, didn't close below, created another higher low here, guys. So looking left for the last couple of years, 12.50 is a very important level. Here we had some nice consolidation before resuming an uptrend. Here you had a break above, a nice fake out with a shooting star, break below, shorts below. So these are very critical levels that we're trading at, which brings great opportunity for this week. Now, let's go on ahead and drop down to a lower time frame. Let's check out what's going on the 4-hour chart. So we have our outer trend line holding. Let's go on ahead and apply our next trend line to see more precise price action on lower time frames. So let's bring this up to here. So it's clear, guys. It's very clear that we're bullish, that we can look for longs this week. What I would recommend, taking out one of my favorite tools, is if I draw my fib from here to here, and we look above if you're going to go long, I would wait for a 4-hour candlestick to close above 12.50, a minor pullback or maybe even some consolidation in this zone, targeting 1260 to 1270 an ounce this week with stops below 1234. And that's more of a swing trade, guys. Of course, it might take a couple days for it to complete. You have to use very, very, very tight risk management to take such a trade. And if I zoom in to look at some risk reward options, the 161.8 would seem like a more substantial trade. You'd have a very, very deep stop loss on this one. It'd be more of a 1-to-1 risk reward ratio just to be safe. But as long as price breaks above, we can move our stops up. So I'll be monitoring this for the next day or two to see if an entry presents itself. Now, on the flip side, guys, the reason why you don't enter late and you wait for confirmation, because, this price can simply do this as well and take stops out, right? And then resume up. So we have to monitor price action, number one, to look for longs. This scenario would create better opportunity, but for now, we need to sit on our hands on gold. If you didn't take your entry off the 38.2% Fibonacci level, you need to sit on your hands, monitor price. It can easily consolidate in this range and then make another higher leg up, but gold is definitely bullish. Now, as we all know, when gold is bullish, when it makes the dollar weak, they have a negative correlation. So let's go on ahead and look at dollar versus the yen. So on the daily time frame, we have been trading within 112 and 114 for quite some time now, since September 13th, so the last few months. But the reason why the dollar versus the yen is bearish is because, once again, on the daily time frame, you have a nice peak formation here. You have another lower high here, another lower high here with a daily spinning top and all types of crazy price action before the break, and another lower high here. So that's 1, 2, 3, 4 lower highs, which signals bearish price action. We all know the dollar is weak this week. Now, if you didn't take your entry because market just opened yesterday, don't chase a trade. This is what we have to look for. As our level of 112.50 has held for the last month, a daily candlestick has not broken below this zone, so it's a critical support zone. Now, zooming out, you still have an uptrend here. You have a higher low here, a higher low here, a higher low here, a double bottom testing support here, which are both higher lows, as well as this support zone here. So it's not necessary to chase this trade, but as we see on this level of 114, 1, 2, 3, 4. This is obviously overtouched resistance on a higher time frame, which is very, very valid. So now let's drop down to a lower time frame once again. And I like to make it extremely simple for you guys, so you have a broad understanding of how to trade the markets, what to look for, how to get in, how to get out, and use tight risk management. So looking at this, the ideal situation would be for price to come down to this level of 112.20. From here, it's not just going to break and go all the way down. We all know the market moves in waves. Come back up and test 112.70 zone, our 38.2, and start targeting 111.50 to 111.20. That's some price action we could see this week. As long as momentum continues, our levels are broken, price action plays out, and you could keep up with my stories on Instagram to go on ahead and see exactly what's going on. So this would be the ideal situation. We can also see maybe even a higher retracement to our 50, to our 61.8. But all this is nice resistance zone, which was one support. So let's monitor dollar versus the yen, which we are extremely bearish, but don't chase the trade. Last but not least, euro versus the dollar. Now, for quite some time, once again, the 1.13 level has been holding since the end of October. So clearly a whole month. But when you zoom in on the daily time frame, you have a nice doji here. 1, 2, 3. Shorts activated. You have a nice bearish engulfing here. Testing that zone. Then another drop. And we've kind of consolidated. But as you see, the top of our wicks are getting lower and lower. Now, right now, shorts are not valid because, as you guys see, the 1.1310 zone has held for quite some time. We haven't had a daily push below, and we haven't traded below. But we're still trading in this nice downtrend. As you see, the wicks are becoming lower and lower. Now, just a few days ago, once again, we had a nice spinning top, which I'll highlight for you guys. This is an amazing candlestick on the daily to trade. So we have this nice spinning top here. And we had a nice bearish break, and we've tested right back into this zone. That's why it's important you don't jump into trades on the first attempt. So we're testing this zone now, guys. We're clearly in this box when you drop down to a 4-hour time level. Let's go on ahead and widen it out. So the ideal situation on Euro USD, since I see a bunch of lower high here, would be for price to maybe come up just a little bit more to our 61.8, which is the 1.1370 zone, which we must monitor, and to come down to 1.1280. Guys, this could be a nice trade for this week. Got all three pairs. We're closing in on an entry on euro dollars simply because we are trading in the price range that I needed to trade in to start monitoring price to take an entry. Now we still must be patient. This can play out perfect. And as you guys see, I'd have my stops above 1.14. You're talking a 30, 35 pip stop loss for 100 pip target. And we could even target with our stops over our entries around this zone. Once we start breaking, we can even target 1.1250 as it's another critical zone, but 1.1270 for sure as our first target, and we'll see how it plays out. So stay up to date on our Instagram. For those of you guys that are not following us just yet, it is now VisionfxCapital. VisionfxCapital, guys. And we have a lot of great things going on with the company as we build in 2019. You are going to see massive productivity, massive trades, massive mentorship, as well as something unique and different going on in 2019. And we look forward to trading with some of you guys and teaching and touching all of our students across the world. Follow us, stay up to date. Here's some free analysis for all you guys. Take advantage of it, make some money, but be smart. Have a good night.